Hi, everyone. I'm Akanksha, and I am the Content Marketing Manager with Delta Technologies, which is part of the Zappy Group of companies. I'd like to welcome you to this session. Please remember that the session is also being recorded and will be available to watch on demand following the session. If you have any questions during the session, please add them to the Q&A tab, which you can find to the right of your screen. Note that your questions will be sent privately. With that, I would like to introduce our speaker. I'd like to welcome Katherine He from TDK Ventures, who will be speaking today about where the US has gone wrong with the EV battery sector and investors' perspective. Welcome, Katherine. Please take it away.
Thank you so much. Hi, everyone. My name is Katherine. Very happy for the opportunities to talk today. Let me share my screen real quick about my talk. Okay, hope everyone can see my presentation. All right. Hello, everyone. My name is Katherine He from TDK Ventures. And today I will be sharing an investor perspective on where the US has gone wrong with EV battery industry. And more importantly, I would like to share what are the opportunities for the US in the new era. First, I would love to introduce TDK Ventures. We're the venture arm of TDK with 350 million AUM across 3 funds. We actively support breakthrough inventions, innovations that can scale impact. We invest globally in early stage hard tech startups across digital transformation, we call it DX, and energy transformation, EX. We are particularly interested in batteries, energy storage, and electrification because under TDK, we have one subsidiary company called ATL, which is a leading lithium-ion battery manufacturer for consumer electronics. For many who are not in the battery industry, might not know the world's largest lithium-ion battery manufacturer, CATL, was actually very originally spun out of ATL. So in the ecosystem, a joint venture between ATL and CATL was also established called MPACE to focus on energy storage and applications. You can see in our ecosystem, TDK and our associated companies, we make batteries, we run battery business, and we innovate and invest in promising battery technologies. Let's start with some data of my presentation. The US is far behind in EV adoption compared with other regions. You can see the chart here. While China has nearly 50% of EV penetration and Europe is approaching 30%, the US lags at single digits, less than 9%. The US is facing structural obstacles that prevent electrification at scale. Not only the EV adoption, the whole US EV and battery ecosystem is not performing the way it should. From battery startups, EV startups, charging companies, and lithium producers, all these related business segments are having another year of struggle. Many of us might forget the US actually had the first move advantage, but later on lost it. Let me remind you, the world's first lithium-ion battery was built in the US. The world's first cathode, LCO, was invented in the US. Then LFP was invented in the US. Again, NMC was invented in the US. Plus, the world's first company to commercialize LFP batteries, A123, was born in the US 24 years ago. However, looking back right now, looking at all the cars running on the road equipped with LFP batteries, only 3% of them are equipped with batteries made in the US. All the rest come from China. Though US starts early on all the battery technology innovations, US now only contributes 6% of the global battery production, while China is dominating nearly 80%. So what happened in the past 20 years? What has China done in the past 2 decades, not just leading the electrification towards 50% of its own EV penetration, but also dominate the global lithium-ion battery industry and manufacture batteries to power the majority of EVs running on the road across the globe. I would love to have the discussion by telling some stories. First one is about BYD. A young man called Wang Chuanfu started a company called BYD. The picture here you see is literally BYD's first factory in 1995, where workers are hand assembling nickel-cadmium batteries in a very shabby tent. The company managed to survive their business, and this picture shows 10 years later. They apparently upgraded a lot and built their first production line. Since they cannot afford the 5 million to buy a full production line from Japan, they studied and break down the production process. And then they only purchase the key equipment, while the rest of the process are done by human workers instead of fully automated machine arms. Guess how much is their final cost of this production line? It is an incredibly only $140,000 instead of 5 million. OPEX was very low as well. The worker base salary at that time was only $60 per month. Not only they saved the money on building the production line, but by breaking down the manufacturing step by step, the team continuously accumulated the manufacturing know-how from every single step of their real hands operation and gradually design and upgrade the tooling and equipment. As the industry marching towards higher energy density lithium-ion battery, BYD continued iterating their battery manufacturing know-how and also production design. In 2018, the company built the world's largest and smartest 24 gigawatt-hour battery plant, which is already their sixth generation of fully automated battery production. And now, after 30 years of hard working, BYD established in total of 135 gigawatt-hour of battery production capacity, ranking the number second in the world. Okay, you might want to ask, if BYD is second one, then who is number one? Here is another story to tell. In 1999, another young man called Robin Zeng and his co-founders established a company called ATL to make batteries for consumer electronics. To kickstart their venture, they invested $1 million to license lithium polymer battery technology from Bell Labs in the United States. However, upon implementation, they discovered that the technology they acquired have some significant issues, including battery swelling and occasionally explosion after repeating charging cycles. However, remember, this cost them $1 million. $1 million, that's a huge amount of money if you still remember the story of BYD, where they end up with spending only $140,000 to build their entire production line. So Mr. Zeng, he was very frustrated and he didn't want the money just to go with the wind. It prompted Mr. Zeng and his team to engage in extensive research and development, and then they tried all the possible solutions. And finally, with an innovation on electrolyte design, they solved the gassing problem. Among all the 20 licensees of this Bell Lab lithium polymer battery IP, ATL was the only one solved the technical issue and first commercialized the pouch cell lithium polymer battery. Later on, the company has been acquired by TDK, with TDK at that time still doing cassette business, injecting the leading thin film coating technology into ATL, and then ATL gradually perfecting its electrode manufacturing technology and becomes the world's number one battery manufacturer for consumer electronics. In 2011, Mr. Zeng sensed the market opportunity of developing batteries for EVs. So he spun off the EV business group from ATL as an entire new company called CATL, which becomes a fully Chinese-owned company to take advantage of the Chinese government policy and subsidies, which is up to $400 per kilowatt hour for EV batteries. 4 years later, with Chinese government continue to roll out the white list, which basically blocked all the non-Chinese battery giants, for example, Panasonic or LG, to come into the Chinese markets. So CETL and BYD took the advantage and the opportunity to dominate the domestic EV markets. The company went further by continuously vertically integrate supply chain that they acquired Brump, which is now the largest battery recycling company in the world, which also provides cathode and anode materials back to CATL. The company moved fast with capital raising, accumulated more than $2 billion within 2 years, and then went public in 2018. CATL now has over 330 gigawatt hour of accumulated production capacity, only 38% of the global market. They are building gigafactories not only in China, but also in Europe, and continues building business on LFP, making innovations on cell-to-pack technology, developing new sodium-ion battery chemistry, and announced their latest condensed matter batteries to address the eVTOL market. So not just a company championing the installed capacity globally, CETL also leads the innovation of lithium-ion battery from many ends and dominates more than half of the entire lithium-ion battery manufacturing IPs in the world. Let's move back to the US. What US has missed? No doubt, the US had a perfect start of all the very early lithium-ion battery technology inventions and breakthroughs. Both Professor Goodenough and Professor Whittingham won the Nobel Prize due to their contribution of invention of lithium-ion battery. And with one of the most brilliant professors, Professor Yan-Ming Chang from MIT, started A123, the world's first company to commercialize LFP. The company raised decent money, IPO'd in 2009. But since 2008, the burst of economic crisis, the Government Stimulus Recovery Act put hard requirement that all manufacturing have to move back to the US. Sounds familiar? So A123 at that time was purchasing material from China and coating electrode in South Korea. The company was forced to move the manufacturing back to US and then open 2 plants in Michigan. However, the result is even their manufacturing LFP batteries, which is supposed to be much cheaper than NMC or NCA, the price of LFP batteries made by A123 is almost 4 times higher, more expensive than the NCA battery made by Panasonic. So if you are the customer Tesla in 2010, who would you choose to work with as your cell partner? Not long, the high manufacturing cost, the supply chain challenges, and some accidents and recalls finally caused the company to bankrupt. If we put the 2 company journey together and comparing them in the same timeline, almost at the same moment, at the 2 sides of the Pacific Ocean, both companies all achieved some technology breakthrough. While A123 raised large capital and went IPO, outsourced materials and electro manufacturing to Asia, ATL caught the market boom of consumer electronics and started at a small and niche market where ATL gets early into the market and continuing perfecting the technology and iterated their manufacturing. Most importantly, Chinese government put control on the procurement to block the giant competitors from Korea and Japan like LG and Panasonic, while providing huge amount of subsidies for domestic manufacturing. In comparison, US strategy was to force the cell manufacturer to move back, and it cut off the supply chain for the cell manufacturing like A123 before the domestic supply chain has been established, which usually will take decades to establish, causing the manufacturing like A123 in the US lost the cost advantage and failed to compete with incumbents like Panasonic and lost opportunity to provide the first-to-market solution to customers. In comparison, CATL ride the wave of procurement mandate, capture the market, grows fast together with domestic supply chain integration, and becomes the world's #1 battery manufacturers for consecutive 9 years. I will pause here for a second. Let's reflect on what we are missing in the US and what lessons we should learn from China. I would love to share some of my thinkings and thoughts for what happened in the past 20 years from an investor perspective. First, hollowing out in the US manufacturing. This has not just happened in the battery industry, but companies pursuing for financial exit and went for IPO too fast in the US. And then the mission becomes to maximize the profit margin and shareholders' benefit. And of course, to make the balance sheet looks better, outsourcing the manufacturing has always been a theme for US companies, which causes the hollowing out of the US manufacturing for several decades. Second, I will address that cost really matters and market matters. Even now, there are still numerous startups pursuing higher and higher energy density with fancy new materials and processing. However, many of them are limited in the scope of lab innovations without the business acumen of looking for technology market fit. Batteries are very different than semiconductors. Without a competitive product with attractive cost, it will be very hard to sustain the business. Third, also I would think might be the most important one is timely and consistent policy support. The key here is to incentivize end users and customers to pursue domestic manufacturing and more mandate not only on the production side, but also on the procurement side. Even though IRA is already 12 years later than Chinese EV subsidies, it's never too late to start. However, the question is how long the policy will sustain. The Chinese EV subsidies started from 2010 and still going on now with cascaded incentives. With the new Trump administration, we are already seeing DOE fundings are paused and rescinded, and IRA Act is still in shaky place. Nobody knows where the policy will land and what is the future of electrification in the US. I'll put a question mark here. Another thing I will discuss is the patient capital and the partnership. For the patient capital, US has a very active landscape of the capital and fundraising. The VC numbers in the US has increased by 200 times in the past 10 years. However, most of the VCs in the US, they don't know batteries. They don't like batteries. It is capital intensive and time consuming. Many financial VCs and funds who are looking for fast return never want to touch battery investments. But this is a long game. It is an entire new industry never existed before. From EV to cell makers, from anode to cathode to electrolyte separator makers, this is an entire new ecosystem to be built. Patient capital is needed and long commitment is needed. Another topic is about partnership. Like what happened between TDK and ATL, what we need now in the US is not too much competition, but more collaborations, not detachment. US is already behind on the manufacturing, so innovation or innovative collaborations on technology and market exchange, I would say, is a very promising opportunities for us to explore. In summary, we need to bring supply chain back, build the manufacturing know-how, innovate differentiated and cost-attractive products to feed the unique markets in the US. Together with reliable policy support and patient capital, we believe that now is the time for us to build a complete and competitive and resilient EV and battery industry value chain in the US. As I said at the very beginning of this presentation, we're not just talking about where the US has gone wrong with the EV battery industry. More importantly, we would love to share where we see as very promising and fast-growing investment opportunities in the US on electrification. One mega trend that we have noticed is a massive growth in the US energy demand driven by AI and data center expansions. As you can see on the left, the total electricity demand from the segment is projected to climb to nearly 9,000 terawatt-hour by 2030. That is more than Japan's entire annual energy consumption. The huge power demand is driven by AI and data centers, which are growing at a remarkable 40% of a CAGR. And if we look at the whole global data center distributions, the US is leading as the largest country, owning more than 5,000 data centers, which is 10 times larger than the second place, Germany, and third place in the UK. It is predicted that by 2030, the data center alone will account for about 12% of total US power demand. However, the surge in energy consumption is creating more challenges for the existing power grid infrastructure. The US power grid was mostly built in the mid-20th centuries, with 70% of the transmission lines are already over 25 years old, approaching the end of their serving life. And also the power transformers are average 40 years old and are about to retire. Power plants are average over 30 years, while building new ones with interconnects will take up to 10 to 15 years. So the age infrastructure is limiting the integration of new power generated. Even though there's a rapid increase in renewable projects like solar and wind, many of them are waiting to be connected. And projects stuck in the queue, which used to be less than 3 years, now are the queue lines up to more than 5 years, sometimes up to 6 or 7 years. Thus, the clean energy generated by solar and wind can't be fed into the grid just because of our outdated infrastructure. Just in 2023 alone, the curtailment of the renewables has achieved 2.6 terawatt-hour, representing a massive $2 trillion of lost opportunity on energy generation. Now we see the problem. On the one hand, AI and data centers are driving huge demand of power, and tech giants like Google, Microsoft, Amazon, they're all fighting for power access, especially 24/7 clean and firm green energy. While on the other side, we're dumping terawatt-hour of renewables every year due to the failure of integration to the grid. Here is where we actually see a great opportunity for startups and entrepreneurs. With a strong market pool in the US to accelerate the electrification by the help of BESS, the battery energy storage system, to play an important role to balance the grid, integrate renewables, and unlock the full potential of batteries and accelerate the transition to a cleaner and more resilient energy ecosystem. Here, I'm going to showcase how BESS, battery energy storage system, are positioned to drive the market leadership in the US by providing reliable, scalable, and sustainable power across multiple sectors. First, renewable integration, where BESS can help smooth out the intermittent nature of solar and wind. Second, grid stabilization by responding rapidly to the fluctuations in demand and supply. Third, EV and charging, where on-site battery storage at charging stations to improve charging reliability. And also, fourth, to serve as a backup power for behind-the-meter application in residential and also commercial cases. In short, battery storage is becoming a crucial part for modernizing the US grid, supporting renewables and meeting the surging energy demands driven by AI and data centers. This is why we see BESS as a major investment opportunity, which will progress even faster than the EV segments that will shape the future of energy landscape in the US. With this strong market pull, looking back at the challenges of US battery manufacturing, here in TDK Ventures, we identify the problem to be we cannot make competitive batteries in the US because there's no domestic supply chain and we are lacking manufacturing know-how. To solve the problem, there are a million things we can do, but the most urgent opportunities that we identified that worth the most attention are battery recycling, critical minerals, dry electrocoating, and new chemistry platform like sodium-ion batteries. First, battery recycling. Battery recycling, we regard it as a shortcut of getting cathode and anode materials back before the domestic supply chain is established. Second, critical minerals. We will see mining is the most time limiting step of building domestic supply chain, and which will usually take 7 to 10 years from discovery to development. Thus, innovative way of securing and processing critical minerals are needed right now. Third, dry electrocoating. Compared with what Asia is doing now with conventional lithium-ion battery slurry coating, dry electrode technology could save up to 40% of energy consumption and cost reduction. That's also why Tesla is driving a lot of efforts towards dry batteries. Fourth, sodium-ion battery. This is for the special market need of the US for grid-scale energy storage system. The intrinsic chemistry and also electrochemical properties of sodium-ion batteries with wide temperature and also safer chemistry is a much better fit than lithium-ion battery as energy storage cells to meet the fast-growing power demand to support the grid. After we identified these promising subsegments, we have evaluated almost all the solutions in the market, from incumbents to startups, to investigate their technology and product and manufacturing readiness level. And we picked the promising startups in these hills that we identified, hoping them to grow into the king of the hill and solve the problem we're facing in the US battery manufacturing. Here are some examples of our investments driven by our thesis. Ascend Elements, which innovates on recycling and upcycling battery materials, enables circular economy and ensure more sustainable battery supply chain. Now we need not just batteries, but better and greener batteries. Novalis is another company that we invested, addresses the critical minerals challenge by providing a novel lithium extraction and refining process, aiming to produce domestic lithium chemicals with a simple and clean flow sheet, providing low-cost structure with zero waste. AM Batteries is developing a new manufacturing platform by electrocoating by utilizing electrostatic static dry coating technology to enable up to 40% of energy consumption and also reduction on the cost. At last, Peak Energy, which is focused on the next generation of sodium-ion battery, ESS, with an emphasis on the tech market fit to the US to address growing energy demands, to support the grid and build US-based supply chain that will have a much less reliance on existing lithium-ion battery supply chain. So some key considerations for our investment are we're more focusing on LCA and PCF, as well as critical minerals ownership, and to find those regional kings, what will be winning in the US. And we looked for technologies and startups who have the new platform with IP strengths and find the best product market fit to be potential market leader in the US. So I would love to stop here. I believe now is actually the time to take action to invest in the US, innovate in the US, and build in the US. I'm actually a new mom with a 4-month-old baby. The drive to build a cleaner future for our next generations only becomes stronger. Imagine a day when we have data centers powered by modernized power grids, supported with battery energy storage systems, and EVs running on the road equipped with domestic manufactured batteries with zero emission. I would really appreciate the opportunity to give this presentation today and would love to call for actions from the industry to reflect on our past, learn from others, and with innovations to drive low cost or cost attractive products and accumulate manufacturing know-how together with forward thinking policies and regulations and patient capitals. I believe with that, with all these reflects and the new actions to take, we're closer and closer to the future than ever before. And your involvement, the audience here today, you can help to turn this vision into reality. Feel free to reach out to me at any time. Together, I believe we can build a more sustainable and prosperous US energy landscape. Thank you, everyone. I think I finished my presentation early. I will have a lot of time left for the questions from the audience.
Perfect. Thank you, Catherine. So we have one question that's come in. How does solid state batteries play into the equation for both EV and BESS?
Yeah, so solid state batteries, we have been looking at this space since I first joined TDK Ventures almost 4 years ago. It is a very promising areas, I would say, in terms of the next gen battery development, more on the R&D side. However, solid state batteries has constantly facing technical challenges and also manufacturing challenges. Some of the leading companies that we know some already IPO'd or went SPAC, they're still having very low yield rates, meaning that you can build a solid state battery in the lab as a prototype. However, if you want to do it in scale or really move to the manufacturing that's achieving the same, I would say, unit economics as existing lithium-ion batteries, there's still a long way to go. For example, right now, CATL have the battery yield about more than 95%. However, many of the solid-state battery players, their yield is still single digit. So to solve the technology problem is one side. To make the manufacturing works is another side. There's a lot of benefits of solid state batteries. It could be safer, and also if you unlock lithium metal anode, it could be much higher energy density cells. However, a lot of trade-offs or conditions need to be added to make it work. So I would say it is a promising research R&D topic, or that we need to focus on, and probably more resources, more capital, and more patient time are also needed to allow these developers to continue find a solution to solve the mass production challenge.
Awesome. Thank you for that. For everyone, if you want to submit your questions, you can do that in the Q&A tab, and you can find that to the right of your screen. We'll give you about a few minutes. If there are no more questions, then that will be the end of this session. Catherine, is there anything else you'd like to add or say before we wait for anyone to submit questions?
Yeah, I'm actually interested also to see who are the audience here today, and then which segment you are working on, and also what are the challenges that you are seeing or you are facing in the electrification, especially the electrification in the US. Because recently in the EV segment, we're also looking at different segments, for example, like heavy duty electrification, and also some of the using battery as a mobile service for meeting some of the customer needs. So love to explore like what are the challenges, what are the problem, what are the new market opportunities that the audience see from your work, from your industry. I saw some more questions coming
Yes,
up.
yes. The one question is, what are the ideas to reduce the emission footprint of producing or making a battery? Can we talk of a green battery now or in the future?
So I would say if we only talk about green batteries, it will be a little bit unsafe. I think this is a story about Northvolt. I think we know the story of Northvolt raised $20 billion. They want to be the battery makers in the Europe, not only making batteries but also making greener batteries. They want to make the greenest batteries in the world. However, they have put a lot of capitals on building their own recycling, manufacturing their own materials, building their own manufacturing piece. However, the manufacturing cost is still very high. I think I can spend another 10 minutes to discuss about why Knoxville didn't work out. But one point I want to address here is green battery is not enough. It still has to be cost attractive. We still have to make the unit economics work. So many of the investment that we made is not just looking at, okay, because this is having lower carbon footprint, so we're going to invest. It has to be an innovative way that make the entire process lower cost, not only greener, lower carbon footprint, also lower cost. For example, AM batteries, the way that you replace 100 meters long slurry coating production line with a solvent recovery, replace it with dry electrode coating, you can shrink the footprint of your manufacturing from like two like football yard into one basketball court size. So in this way, you really reduce the carbon footprint and also reduce the physical footprint, and then you save money on the equipment that you need for the slurry coating and solvent recovery. So it is a solution not just reducing the carbon footprint, but also really innovate the way you do the manufacturing and really reduce the cost associated with this process. Another company we invested, Novalis, is also not only the way that they do is using CO2 waste, industrial CO2 waste, to directly extract lithium from the spodumene to provide lithium carbonate, which is one very important raw materials for the lithium chemicals. So their entire, if you look at LCA, it's really attractive. However, that is not the only thing that make it work. The reason why we invest is that this is a very clean sheet process that can eliminate a lot of dirty and unnecessary and costly process to make it a one-step end-to-end lithium carbonate synthesis and battery grade lithium production. So I would say making green battery is important, but most importantly, we need a new process, a new innovation, a new manufacturing to make sure this is also cost attractive, not only just make it greener.
Perfect. Thank you so much. So another question that we have is, what can the industry do to propel improvements to grid infrastructure, given the US government is moving towards de-incentivizing grid infrastructure improvements?
Yeah, I think this is also a topic that within our investment team, we're looking at because of the administration shift. We saw Trump just canceled a $5 billion infrastructure bill for supporting the EV chargings. However, there's many parts of the grid infrastructure. Many of them are not just pushed by the government, but also pushed by from the end users. For example, we saw Google and Fervo, the big deals that they signed. Sometimes it's just customer want to have access to clean energy, and then there's a CTT, we call it a clean transmission tariff. So some special terms or could be rolled out more and more. Right now, we're seeing from the customers like Google, Amazon, pushing the utilities and also working together with lobbyists and with government to roll out these kind of pathways or shortcuts for the grid infrastructure to be upgraded or connected to the renewables. So this is some interesting things that we see, not only driven by the government push, but more from the real market demand. The AI data center, they need access to the energy, they need access to the power, they need the grid infrastructure to support. So there will be business opportunities to thrive in this space.
Thank you. So there's another question that's come in. In China, there's a consolidation of battery supply, mainly in BYD, which is vertically integrated, and CATL, who not only provide cells, but also critically packed solutions. Supply chains in the US are focused on cell production. Do you have thoughts on whether or not the US needs a CATL?
That's a very good question. I think BYD and CATL, their paths, they really ride the wind. I would say ride the curve of Chinese developing their entire lithium-ion battery ecosystem. However, in US, we have already 2 decades behind, both building the manufacturing and building the domestic supply chain. So now we're seeing, from the last 5 years, we're seeing companies like Nikola, Romeo Power, Proterra, many of these companies trying to make pack level innovations by importing probably cells from China, and then to make the pack level solution to sold to the customers. However, I think right now we're not seeing any of these companies to really having a successful business outcome. I would say the main reason might still be the very thin profit margin by importing cells, and also even the pack level design. It is very hard to make streamlined pack design without working together with the cell part. So I know some of the leading EV companies in the US, I won't mention the name, they start from importing cells from China to make their own pack, but end up with importing the whole pack from China. So I would say the pack manufacturing, it's very hard to make it a standalone business from our perspective. A lot of design are associated with all the parameters on the cell part. So I think the question is the consolidation of the battery supply in BYD, for example, they make their own batteries, they make their own vehicles, and also CATL, who provide cells and also pack solutions, and also making their battery swapping stations. I think the game might be a little bit different in the US, because US already tried that. The key here is that what are the US way to really leverage the market in the US. For example, I'm talking back to peak energy. I think the team is really smart on what we can leverage from China and what is something that only US team can play in the US. For example, for the grid energy storage, there's more and more piece on how you can manage the energy in the grid, and how you can, in this grid, national grid, which is national security related market, how you can assemble a team to really design the energy storage system to focusing more on the power management and energy management on the customer, on the application side. Because in the ESS system, only the cell part is you can buy it from other places. But most important is the PCS, the control, the system control part that you can design and really integrate to the grid, and then also with the end user, with a lot of even more innovative ways to, for example, integrate to the bidirectional, integrate to the grid, and also even building VPP, or use the piece of the battery as a piece of energy that you can design ecosystem, how to design ecosystem to grab the value, not just by this one-time sell, but also to really leverage the battery inside our system to do energy trading, to do not only one time or one directional, but also more innovative business model to capture the value of the energy piece that you own. We're also seeing some startup just putting batteries in the in like homeowners' home for free. However, its function as not just batteries for the home, but they're building a network of the batteries to make a virtual power plant as a battery utility company. So there's a lot of innovative way to see how the batteries that either we imported or made in the long term in the US to assemble the system and build the innovative ecosystem to capture the value of the batteries. Because I do believe that batteries is not just one-time sell of the, and also not just one lifetime. We are thinking about the end of life. We're thinking about minimal batteries, not just driving the vehicle from A to B, but also participate in the grid, to participate in the energy trading market, and to be one piece of the entire energy and power ecosystem.
Awesome. So that will be the end of our session. You can watch the session on demand after we end the session. And if you'd like to connect with Katherine, her information is available on the slide that she has up. And also, I would like to thank you so much, Katherine, for an insightful presentation. And I would like to thank all the attendees for attending. So please join the next session from the lobby, and I hope you enjoy the rest of your day. Thank you so much, everyone.
Thank you so much. Bye-bye.